Hi all, this is Dr.D.Kiruthika, Department of Commerce with Computer Applications, Dr. S.N.S. Rajalakshmi College of Arts and Science. Today in our series we are going to check about the location of the business related to the tax payments, corporate tax payments. So it plays a vital role, significant role in the corporate tax implications. So what it affects in when we are selecting about a location of a business is, first we have to consider about the jurisdiction and the tax rates. Say it may be your federal versus your tax rates. The business must comply with your federal tax laws and may also be subject to the state and local taxes. So we have to consider both the taxes when we are choosing the location of the business. So it may be your international location also. So in multiple countries it may navigate the tax laws, international tax laws. For the corporate tax rates it may change. So we have to stick on to the compliance requirements and the potential double taxations also. And we can consider the tax incentives and the credits which is given by both the state and the local governments for the welfare of the business. So low tax rates of taxes, holidays, during the holidays for specific industries or the business are given, so that even to the special economic zone, some regions they are giving the tax treatment for business. So this benefits can be enjoyed by way of checking out the location of the business. And again, regarding your nexus, that is your business typically established a tax obligation, that is your nexus in a state if it has a physical presence such as your office, warehouse or your employees. So when such is the case, it can be subject to the business to state income tax, that is even without a physical presence, the business may subject to the taxes if they exceed the certain sales thresholds in a state. So this factor to be considered properly. And regarding your sales tax, the business must collect the sales tax on transactions in states where they have the nexus. The rate varies by the state and sometimes by the locality. For regarding your online sales, it may also allowed in some states to require the out-of-state sellers to collect the sales tax, then impacting the e-commerce business significantly. So this is a very plus to our concerns. And international consideration is done by way of multiple nation companies must comply with the transfer pricing rules, etc. So again, regarding your double tax benefit treaties, countries often enter treaties to prevent the double taxations. So these things can be understood properly for the purpose of the location of the business and regulatory environment also. The different locations having varying compliance regarding your rules and the regulations, it may vary. So it may even affect the ease and cost of doing the business. So the government laws, rules, their behaviors, the reporting requirements and the shareholders' rights, it may also have an influence in your government laws. So that has to be properly considered. So concluding this, it is very essential that the tax implications alongside operational factors to be considered, and again consulting with the tax professionals and the legal advisors can also help the business navigate the complexities of the tax corporate taxations and related to the location. So it says that we have to consult with the tax professionals and the legal advisors to understand about the location of the business and their tax benefits which can be availed, like your incentives, everything. So this advice can be taken into consideration even during your international operations also. When we are doing the international operations, it is well to understand about the exempt policies also, that is your export and import policies related to the tax laws and the GSTs which is applicable, everything. So this can help us to understand about the location of the business and where we can run the business in a proper way and in a good environment to improve our business. So for improving the business, this is the most important factor to be considered well in advance to be done. So when we are doing in an advance, automatically we can have a good strategic planning, and we will be having a profit in the business. Say for example, your incentives, everything can be considered. Offers which is given by the government can be availed by way of avoiding the loans which can be taken. So that is not necessary for the business when it is located in a proper environment. So avoiding your more business expenses by way of considering a strategic planning regarding your location of business with relation to the tax has to be considered. Thank you.